Okay. Hello, everyone. I am Deniz Nur Köken from BeInCrypto, and today I will be talking about Bitcoin ETFs. So a lot of people have been talking about this topic, and I think it is something important to discuss. Because when we put other things aside, many professionals think that positive expectations regarding ETF approval have supported the ongoing process with Bitcoin. For example, expert Eric Balchunas shared new information about the BlackRock iShares ETF application in one of his recent posts. And he was stating that the Bitcoin spot ETF product is listed in the DTCC list opened for Nasdaq transactions. So Balchunas said that this indicates the applications might be approved soon. So this is good news. And this brings us to the fact that we are nearly convinced that ETFs are an important topic to understand and discuss if we want to understand the market better. Because of that reason, today I will mainly talk about what Bitcoin ETF is, how it works, and several advantages and disadvantages of Bitcoin ETFs. So Bitcoin ETF stands for Bitcoin Exchange Traded Funds, and exchange traded funds are publicly traded funds that track some underlying assets. With these funds, investors can trade the prices of a specific company or industry at once. For example, with an ETF, you don't buy individual shares of companies. Instead, you can trade shares in the fund that tracks stocks in the sector in which the companies are located. ETFs became very popular in the 90s due to their convenience and cheapness, and Bitcoin ETF works in the same way as an investment fund. These ETFs are tied to Bitcoin and tracked by the BTC price. Bitcoin ETFs are also listed on stock exchanges. Thus, brokers can buy and sell Bitcoins on the stock exchange in the form of ETFs. So the idea of an ETF for Bitcoin first emerged when Bitcoin's upward trend was noticed. With this trend, it was confirmed that cryptocurrencies have become popular. And realizing that profits could be made by Bitcoin trading, investors and brokers created the idea of Bitcoin ETF. One reason for this is that these people understand that they cannot easily invest and directly in Bitcoin. With Bitcoin being priced up to thousands of dollars, the opportunity for investors to invest has decreased considerably. So at this point, brokers have turned to new alternatives to meet investor demands. Among these alternatives, the Bitcoin ETF's concept comes first. Also, as a fun fact, maybe some of you would like, it was known that the Winklevoss brothers were the first ones to apply for Bitcoin ETF to the Security and Exchange Commission, which we know as SEC, actually. Okay. So we had a grasp of what Bitcoin ETF is. Now we will talk about how does these Bitcoin ETFs work. So ETFs are much better understood in the investment world that we know, the traditional one, than the cryptocurrency market. And moreover, blockchain-based cryptocurrency assets are becoming more complex as they become more popular because there are more projects around. At this point, ETFs emerge with much simpler solutions for the people who feel confused about the market. With ETFs, you avoid most of the cryptocurrency market terminology, which some of you would like. These include mining, decentralized exchanges, and distributed ledgers. You will also not need to know about the storage, key storage kind of stuff, and also the details like the deep understanding of the cryptocurrency assets. In summary, an ETF is an investment fund that tracks the price of an asset or index. ETFs exist today for many assets and industries. These include commodities and currencies. Shares are purchased by the fund on stock exchanges. Thus, the companies purchasing the fund offer fractions of these shares on the stock exchanges. In other words, the fund buys and holds BTC. So they put BTC fractions up for sale on exchanges. The price of the share of the exchange-traded fund fluctuates according to Bitcoin. In this case, when Bitcoin rises, the fund price will also rise. And when Bitcoin goes down, the fund price will also go down. The only difference here is the platform on which the transaction is made. Transactions are made on stock exchanges rather than cryptocurrency exchanges when it comes to Bitcoin ETFs. In order to explain the subject better, it will be necessary to talk about the logic of futures trading. In such transactions, the parties decide how long and at what price a particular asset will be sold. In other words, in futures transactions are carried out at a certain price on a certain day. Bitcoin futures contracts also operate in a similar logic. The parties agree to trade 1 unit of BTC. The fund creates shares at a price based on the current price of a contract unit. After that, it's offered for trading on the stock exchange. One of the first official Bitcoin-related ETF is known as ProShares Bitcoin Strategy ETF, which is also known as BITO, which was approved in October 2021. BITO started trading on the New York Stock Exchange after passing CEC approval, which stands for Security and Exchange Commission. On the other hand, that we understood about the working principles of Bitcoin ETFs, I think we should also talk about the advantages and disadvantages around this topic so that we will have a better understanding. Considering the many conveniences that it provides that we listed about what it is and how it works, Bitcoin ETFs have several advantages, and we will talk about them one by one. The first advantage offered by Bitcoin ETF is the convenience it offers to invest. With this ETF, it's possible to buy BTC without learning the logic of cryptocurrency and with lower risk, because basically you are using the stock exchange, and also for the people who are from the traditional background, it would be convenient. Second, since Bitcoin is not yet regulated, most retirement funds do not allow BTC purchases. However, the regulation of these ETFs by the CEC may mean that BTC will be harmonized in terms of taxes. Third, it is possible to hold more than one asset with an ETF. Therefore, Bitcoin ETF works with the same logic. With this method, you can better manage the risk in your portfolio by diversifying your investments. However, even though we had a really optimistic approach to Bitcoin ETFs at the moment, like every investment method, there will be some disadvantages. And we can summarize them also maybe in 3 main points again. First, ETF transactions charge some fees in return for the advantages they provide. For this reason, you may have to pay transaction fees in proportion to the shares you buy with the ETF. Second, BTC can be bought and sold with other altcoins. However, Since Bitcoin ETF is a fund that only tracks BTC, it cannot be traded in this way. And at some point, this can be considered as a disadvantage for investors. Third, cryptocurrencies are independent of central banks. BTC also emerged to minimize the risks in the current financial system. But the ETF model created for Bitcoin is an investment method that can be regulated by the states. Therefore, it may lose many of the benefits it has due to the decentralization of cryptocurrencies. So as the last note, Bitcoin ETF is an interesting and easy investment method, and this ETF model is becoming popular with the popularity of Bitcoin. There are many awaited different ETFs for Bitcoin and also for some other altcoins like Ethereum on the market. And each ETF offers investors different features. For this reason, which ETFs to invest in should be determined as a result of very thorough research. So thank you for listening. I think it was fast.
Yeah, it was pretty brief, but still, it's easier to keep the audience concentrated on the material.
I hope so.